What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get going, don't forget to check out the links in the description below. There's links to the Rawstocks trading Discord. There's links to Top Step if you're interested in becoming a futures funded trader. There's some other ways you can support the channel, so don't forget to check out the links in the description below. First things first, we're going to get looking at some of the trades that we took in the premium section of the Discord, so I can break it down using the smart money concepts of why and how we took those entries. So if we're looking at the chart here, blow it up a little bit. First entry we took, we got that sell off, right? That delivery down, we got that pop up, okay? And then I saw price kind of jumping back and forth, but setting a new low. Okay. What I liked was this inverted fair value gap. Okay. We had popped up, we set a new low, we came back down, we inverted the fair value gap, we came back into it, came down a little bit. Where I took my entry was when we popped back up one last time for that inverted fair value gap. And I was looking for us to deliver down to the old low in this wick. Okay. We had equal lows down here. I thought we would get all the way down there. We did not quite get all the way down there. We ended up closing the trade in profit, nice profit on the trade. It did not run its full course down to target. Target would have been 1.59 risk reward ratio, even a little less than our normal 2-to-1, but that's because our stop was deeper. If we looked at taking our stop closer to the inverted fair value gap closing, would have been a 3.6-to-1. So if we possibly adjusted that to a 2-to-1, you can see that where we ended up taking our close would have been a hit on the 2-to-1 if we adjusted our stop loss. Either way, was targeting the equal lows, never hit it. Okay, then we have this trend line set up with two lows. What we saw is from low to high that we came back down. This wick would have hit about 62%, which is our optimal trade entry or our golden pocket, right? Then we saw price bounce off, and we saw another inverted fair value gap that is a bullish signal. Now, I did not take this trade, but the way you would have run this is enter in the inversion of the fair value gap and run it at one of the previous highs here in these wicks. Okay, you get confirmation of the bullish activity with displacement candles that are bullish and bullish fair value gaps, right? We get a bullish fair value gap inside here with a displacement candle, another displacement candle, another bullish fair value gap that price trades into, never closes, more bullish displacement, trading back into fair value gaps, never closing them, right? More displacement to the upside. Then we start to trickle back down, but we never close this fair value gap. Then we get more bullish displacement and we run out the old highs. Okay. I did not take any of that bullish trade. I was busy doing some other things, but what I did do is I came back. I saw what happened. I saw us come back down. We get a fair value gap inversion here. We get a bearish fair value gap here. We come up, we trade back into it. I see one more inversion here. I take the entry in the inversion and we run it on these equal lows. Got a nearly perfect exit, had 5 contracts running, closed 4 of the 5 contracts, left 1 runner that I ended up swinging, and we'll see how that goes. But then we started to see some more bullish activity, right? We get displacement, we get fair value gap. Inside there, we get more bullish displacement. We end up running up to close this bearish fair value gap, which is where liquidity sits. So you could have taken that trade too, using the same kind of concepts that I used to take the 2 trades I did. Ultimately, you see we end up kind of consolidating in after hours, and we'll see what lies tomorrow. Now, delivery numbers were horrendous. They were awful. They were, I think, kind of more along the lines of as expected by many analysts, but it was certainly a miss. And so definitely the market reacted to that. It sold off aggressively in the morning, but so did some of the other assets in the market as well. So you could say it was delivery numbers. You could say it was also a general market sell-off. But definitely the delivery numbers impact, the buyers and sellers in the market. And so that was the trades that we took in the Discord room. Again, called them out live in the premium section. If you're interested in upgrading to premium or even becoming a member of the trading Discord, links in the description below. Free to be a member. Upgrade to premium with the code Rawstocks. You get 50% off your first month plus 7-day free trial. So that's 37 days, for half the price. And so if you're interested, again, check out the links in the description below. Now let's jump into the daily chart and see what we got going on. If we look at the daily chart here, okay, we got a 20 period simple moving average on there. A couple things that I've already drawn out for you guys. We'll blow it up so we can see the screen real good. These lines down here, this is an order block. Okay, this is a bearish order block, and it's on the daily time frame. You can see we've come down and hit that order block. We've talked about it before. We saw support. We rallied up. We got the 20 period moving average. We talked about the fact that it has not flattened. It has not curved up. So this pop above it in this retest without getting that 20 period to curve up means nothing, right? It's still a bearish look on the 20 period moving average. Now we've dropped way below it and created a gap. A couple things I want to note. We have right here from this wick to this wick, we have a inverted fair value gap, right? We had a fair value gap that was bullish. Then we traded back down through it. It's an inverted fair value gap now. We also have created a bearish fair value gap. So what I'm looking for price to do is potentially rally up into these fair value gaps somewhere, right? It may just test the 20 period, may pop above it, may pop, just right to it, may fall short of hitting it, but looking for us to kind of push up into there and then maybe attack the order block down below, right? Now we certainly could just dump straight down into the order block. We do have the RSI on the daily starting to turn down below the moving average on the RSI indicator. We could just flush straight down into this order block. We are looking oftentimes on Tuesdays and Wednesdays to set new lows of the week. Well, we have set a new low on Tuesday. Potentially we could see continuation into Wednesday. But also sometimes Tuesday is the manipulation that sets a new low, and we might see Wednesday, Thursday be distribution back to the upside. But don't forget, we have ADP numbers coming out tomorrow. We have jobless claims coming out on Thursday, and we have non-farm payroll week with numbers coming out on Friday. A lot of funny stuff happens on non-farm week. ICT, I'm classically trained by ICT and through his mentorship, recommends not trading non-farm payroll week, especially the Thursday and Friday, right before the news drops. And so, do with it what you will, but definitely looking for some, abnormal manipulation to happen this week, and especially further to the end of the week. Now, if we drop down to the 1 hour chart, the 1 hour chart again shows our inverted fair value gap and our fair value gap on the daily. And what you can see is we got that displacement to the downside right at market open. Okay. And what I also want you to see is that when we pop back up and set this high, at that point in time, there was some indicators that we are going to start trading down. And if you're using smart money concepts, what you can see on the 1 hour is we get an inverted fair value gap right there. Okay. And then if you draw it across, you can see that we've respected that. We've never actually pushed up through and closed it or reinverted it. Right. So just off this top here, using the 1 hour time frame, we could have been taking short entries here last week in that inversion, right? Running our stop losses, on an hour candle close right above that, or even at the high, right? And taking those shorts, targeting previous lows. Now you can see that previous low has been hit. Now we have another previous low below that did not get hit yet, right? So now on the 1 hour time frame, we are looking for, again, price to pop back up, maybe test this 20 period on the 1 hour, maybe the consequent encroachment of this daily fair value gap, and then potentially dump down to take those new lows. Now our RSI is starting to turn up. We have seen a bottom, right? But that doesn't mean that we can't roll back over, take a new low, create some RSI divergence, and then push up from there. So we'll be watching these charts closely, but also want to mention on the 1 hour, you see a lot of displacement to the downside, right? We get displacement, we back test it. Okay. We get further selling, we get back testing, we get displacement candle, we test it, right? And now we get another large displacement candle. So it would be, a possibility and a probability that we do, run a test of some sort on this breakdown candle. Pretty aggressive breakdown candle. And you can see we already started to rally up, but I don't expect that we're going to take the high of that candle, which was again today's opening 1 hour open candle. And that's going to be coming in right around 173. So I do expect that we'll maybe run a little bit of a test on that, but I also don't expect that we're going to run back up on that high. Now, if we break above 173, at that point, I would say things look pretty bullish, and we'd be looking to possibly run back up to 184, 185. But that's neither here nor there. At this point in time, any rally, I'm looking to get sold off back down towards the low 160s or even lower. If we look at the 15-minute chart, and we're using, again, the 20 period moving average, you see after that sell-off, we come back to it. We kind of flirt around with it. and then into aftermarket, we're just kind of flat with the 20 period moving average. So RSI, again, kind of pointed up, but right in the 50, right in the middle area. So we'll see tomorrow. Do we get kind of a gap up, gap down situation, or maybe run up into open or run down into open, right? And that might set our direction. Again, if we take that new low, we would be looking for, price to run back down into the order blocks below. Last, we're going to look at the 5-minute chart, just using the 20 period moving average, same kind of deal, right? Is that we're inside an order block right now, which comes from the previous low all the way back in March 14th, March 15th, where we kind of got that double bottom. But again, if we pop back up here, would be looking for that double bottom or those equal lows to be taken out. Smart money concepts say equal highs and equal lows get broken. So although we rallied up, right, could we expect, as we've taken sell side liquidity here today, that we take additional sell side liquidity here short in the future? I think that's highly likely. So even if we pop up a little bit, expect it to get sold down on. We already looked at the 1-minute chart. We looked at the entries we took today in the trading Discord. Again, if you're interested in joining the Rawstocks family, jump on the Discord, free to be a member. Premium has discount codes right now that can get you some savings just to try it out. Even if you don't use one of the discount codes, 7-day free trial on all monthly memberships. So hopefully you come check us out, see what we're about. Look forward to seeing you guys in the trading room, and good luck tomorrow.